Capital, how SBA funding can help your business through the pandemic, is brought to you by the Entrepreneurship Center program and the CARES Act for Small Business. And now, please welcome Senior Vice President for Economics and Housing Programs for the National Urban League, Sba Richardson.
Thanks very much, Simone. My name is Sba Richardson, Senior Vice President for Programs at the National Urban League, and I'm very pleased to be able to offer brief framing remarks on accessing capital and how SBA funding can help businesses through the pandemic. According to recent data that I've seen, there are more than 11 million minority-owned businesses in the United States. This figure has grown by more than 50% in the last decade, and these businesses generate more than $1.8 trillion in revenue and employ 6.3 million workers. Despite this entrepreneurial boom, one factor continues to limit the establishment, expansion, and growth of minority-owned businesses, which is access to capital. Capital is what allows businesses to stay competitive in the marketplace, to state the obvious. But on average, Black entrepreneurs are less likely to receive loans, and when they do, they receive lower dollar amounts and higher interest rates. Yet not all hope is lost. The Senate recently introduced a bipartisan committee aimed at closing the funding gap for minority-owned and women-owned businesses. It will take time to pass this type of legislation, but it's a small step in the right direction for fairer minority business loans. And although the small business financing landscape is a long way to go before the playing field is equal for businesses of color, there are a handful of small business loan programs that are ideal for minority businesses. However, some of these can be designed and refined to more optimally meet the needs of minority entrepreneurs. The 7A program and some other loan programs, for example, you need to have relationships with a financial institution. And the pandemic has revealed that's more challenging in minority communities and underserved communities. Just not as many banking institutions are interested in doing business there, unfortunately. We also find that generally minority businesses get smaller loans. They get them more expensively, and with interest rates much higher, etc. So there has been an historic discrimination in minority communities that has not yet been rectified, clearly. So when we look at particularly in a pandemic, where you have a recession, it's even more challenging. And that's why government needs to step up and provide the service within SBA to connect small businesses with programs that are available. From our experience, for example, microloan programs work much more effectively. So let's take the lessons learned in the microloan program and apply that to more of the tools available under SBA. One idea. If you're a minority business owner and are interested in financing to help your business grow, especially during such a fraught period as now in the time of COVID, please carefully follow the conversation to come. And for me, I see the problem as not so much that minorities don't get the loans that they're qualified for when they apply, it's that they don't seem to be as aware of the programs or have access to them in the first place. This is the racial knowledge gap that fuels and presages the racial wealth gap. Let's break that cycle. Together we can do that. So please plug in, lock in, and prepare for a wide-ranging and topical presentation and conversation that will boost your own knowledge, financial acumen, and confidence. Thanks for being with us. I'll now defer to my colleague, Stephanie Devon. Thanks.
Thank you very much, Sba, and good afternoon to everyone. Welcome to our presentation. I'd like to introduce our distinguished speakers. First, Everett K. Sands, CEO of Lendistry. Everett K. Sands has 20+ years of experience in lending, including stints at both national and community banking, and most recently as leader of a community development financial institution, or CDFI. Everett served as a board member and executive for 2 minority deposit institutions where he helped the bank's lending teams to grow exponentially prior to joining Wells Fargo. Everett has also had significant experience in commercial real estate development, property acquisition, and lending. He is a partner in a real estate asset management company located in Baltimore, Maryland. Everett started Lendistry with the goal to make funding more accessible and affordable for small businesses, particularly those in underserved communities. A graduate of the University of Pennsylvania, Everett is a board member for the Penn Institute for Urban Research and a board member for the Center for Strategic Economic Studies and Institutional Development. Our next speaker, Joanne Lawrence, is Deputy District Director of the Louisiana District Office of the U.S. Small Business Administration. Joanne Lawrence has over 46 years of service with the federal government, all with the U.S. Small Business Administration, or as we like to call it, the SBA. She has extensive experience and expertise in providing business development, capital access counseling, contracting, and procurement assistance to small businesses in Louisiana. Ms. Lawrence is frequently called upon for training initiatives across the country, and she has worked on several standard operating procedure manuals in all areas of small business development. She has demonstrated unequaled leadership and initiative in training new employees, as well as mentoring all staff. Ms. Lawrence has taken on additional duties and responsibilities in light of recent losses in the local office, and she's been recognized with numerous awards throughout her career for her leadership skills and small business advocacy. And with no further ado, I'd like to turn it over to our panelists. Thank you for joining us and enjoy the conversation. Everett?
It's a pleasure to meet everyone, and thank you for the opportunity to be here. We are excited to share with you our thoughts about SBA lending and how SBA can help small businesses. We'll also share with you some other insight, including one, how to apply for PPP and other products that might be available to you. My colleague here, Jo, will start with her SBA presentation as soon as she's ready. And then what we'll do is we'll try to make this as interactive as possible, answer some of your questions. We recognize we might not get to everybody, but we'll do our best to get to you as soon as possible in terms of the answers to the questions and give you enough time to be able to ask us those questions. Thank you again for being here. Jo, I'll let you take it away.
Okay, good morning, everyone, and thank you so much, Everett and Stephanie and Cy. And I appreciate this opportunity to be able to share information with you on what SBA is doing to assist the small business community during this pandemic. So I'll start with what we have available to us or to the small business community under the 2021 COVID-19 Economic Aid Act. And you'll hear us refer to it as the Economic Aid Act, but the full title is Economic Aid to Hard-Hit Small Businesses, Nonprofits, and Venues Act. And of course, this act was put in place to assist and to reach those underserved markets that Cy mentioned in his opening comments. So I really appreciate his sharing that information. So we'll just talk a few minutes about where we are, the funding opportunities that are available, the programs which include PPP and Eidl, the grant programs that's available through Targeted Eidl Advance and the Shuttered Venues Operators Grant, and then additional assistance that's available to you from SBA. So please keep in mind that Congress intended the Economic Aid Act to help those hardest hit small businesses in the underserved communities, which includes women, minorities, and veterans. And we are committed to fulfilling that to the best of our ability. And if you heard the announcement that was made by the White House yesterday, as it relates to our Paycheck Protection Program, beginning tomorrow and running through March 9th, we're going to restrict the applications that are accepted to those from sole proprietors and self-employed individuals and those with employees of 20 or less. That's going to allow us to focus more on those underserved markets under the PPP program. So the PPP program, just by way of overview of what's available to you as a small business, is the program that allows for forgiveness of the loan if at least 60% of the costs are used for payroll and 40% of the costs are used for eligible expenses. And under round 2 of the PPP program, those eligible expenses have been expanded. So they still include payroll costs, rent, mortgage interest payments, and utilities. However, what's been added are operations expenditures, property damage costs, supplier costs, and worker protection expenditures. We're also continuing to provide debt relief on existing SBA 7A and 504 loan programs. That debt relief means that SBA is going to make your payments for a certain amount of certain period of time rather. And then of course, the economic injury disaster loan, or the Eidl, which we refer to as the Eidl, a lot of you hear of us refer to that, is a working capital loan. And now we've also launched the targeted Eidl advance, and we'll discuss more about that later on in the presentation. The Shuttered Venues Operators Grant is not up and running yet, but just so you know, that is another program that's been made available under the Economic Aid Act. So with the Paycheck Protection Program, some key takeaways. We want you to know that we've expanded the use of the funds that are acceptable for forgiveness. You have the choice of choosing between 8 weeks and 24 weeks as your covered period. And your covered period is the time in which you have to use the loans that are dispersed to you. We're offering a second draw loan to those businesses that were hardest hit by the pandemic. And we'll talk a little bit more about that. And it allows for the deduction of expenses covered with the PPP loan on your federal taxes. If you recall, IRS came out and said that for those expenses for which you use the PPP loan to pay, you could not deduct them on your tax returns, where they've now reversed that. We are preparing a simplified forgiveness application for loans up to $150,000. And we will no longer deduct any Eidl advance that you received from your PPP loan forgiveness amount. So what's the first draw? For eligible applicants that did not receive a PPP loan prior to August 8th or August 9th, 2020. So the first draw was when we opened the portal up on January 13th, we restricted applications to our community financial institutions. And that, because those are the organizations that generally service the underserved market. So we restricted competition to those, applications to those industries. And now those are the only types of lenders that are included in our lender match. The reason for that is so that we could reach more of our targeted market. We have now included additional types of entities that are eligible for the first draw. We've expanded the expenses. As I mentioned, you do get to select your covered period, and certain borrowers may request an increase in their original PPP loan. And you must have been in business as of February 15, 2020, and you must submit your application before March 31st, 2021, or when all of the funds are exhausted. Now, regarding the March 31st date, notice that I said you must submit your application by that date. That means that the lender needs to have your application in the portal by March 31st, 2021. Previously, under the first draw program, the loan had to be approved by that date. So I want to stop here because Everett has some tips that he would like to share regarding the PPP program and your submitting the application. Everett?
Thank you again, Joe. Great information. So one of the things I want you to concentrate on is just how to apply. Lenders is one of the largest minority-led lenders in terms of PPP. We did roughly about $185 million in the first, and hopefully we'll do the same this round. But what I'm really conscious of is I want to make sure you understand a couple things out there as business owners. The first thing is the word paycheck. Sometimes we get a little bit lost in that word, and it doesn't necessarily mean you need to write an actual paycheck. SBA has been kind enough to give us different guidelines for different types of businesses. So let's start with the ones that write the paycheck, and then we're going to come forward. So if you are a C Corp or possibly an LLC, and I recognize there's a lot of different types of LLCs, or if you're a partnership and you do pay a paycheck, then you should be able to provide some type of what we call payroll summary. Now, you might be with a company like ADP, TriNet, or one of these other companies, and they'll prepare that for you, and you can go to that and get them. But let's say you don't. Let's say you use QuickBooks or Peachtree or one of the other tools, then you would get your payroll summary from one of those accounting tools. Let's say you don't use any of that and you're using some other form. We just need to see who you pay. If you go through a lender like Lendertree, and most lenders have this, we give you what's called a Payroll Calculator, where you can insert the names of the individuals, the amount that they get paid. I do want to caution you that everybody gets capped at $100,000. So if you make $100,001 or you make $1 million, and I hope you all make $1 million, you're going to get capped at $100,000. And to make the process really simple, what we do is we just take that amount that you put in, so say 100,000, we divide it by 12, and then we multiply by 2.5. And that gives us the amount that you're going to get approval for a loan. So let me just back up and say that again. We take all the employees, all their income, we cap it at 100,000. We then divide that by 12 and multiply by 2.5. So what we do is we take what's called the average monthly, and we give you credit and a loan amount for 2.5 times the monthly. There are certain industries that get 3.5. You might have heard about that. You feel free to discuss that with your lenders, but the majority of people are going to get 2.5 times that monthly amount. If you're a partnership, we look at your K1s, and we're going to look at specifically on the K1, we're looking at 14A. So I want you to write that down if you're a partnership. So if you file a 1065, you file a partnership return, we're looking at 14A. 14A is what you report to the IRS as what we call FICA, as your federal tax, part of your federal taxes in your FICA reporting. FICA is what's used to determine Social Security and other things when you retire or when you need other benefits. So naturally, the SBA says, well, whatever you report to the IRS, that's what we want to use. And the specific part of that K1 is line 14A. Let's talk about our sole proprietors now. If you're a sole proprietor, which basically means you file a Schedule C. So I'm going to say sole proprietor, 1099, which are independent contractors, and sometimes we just call them self-employed. Don't get lost so much in the language. Let's just talk about if you file a Schedule C. You've got two options here. Let's talk about the old and let's talk about the new, because this could get a little confusing. And this just got announced, so please, I'm putting an asterisk right now. Here, I just drew the asterisk. I'm putting the asterisk right there because I'm gonna mess this up, but I'm gonna get as close as I possibly can. So let me walk you through it. The first thing is, in the past program, so literally until I think tomorrow, we would take your Schedule C. We would look at line number 31, which is your net profit. That will be your annual income as a sole proprietor, okay? Your annual income, we do the same thing. We cap it by $100,000, we divide it by 12, and multiply by 2.5. So line 31, you can go home or you can look right now, hopefully you're at home and you're being safe. You can look at line number 31 and you can see net profit. We're going to divide that by 12, multiply by 2.5. That's your loan amount. It's actually really, really simple. Yes, there's some things we can add back in, but let's keep it very basic right now. Now, after Wednesday, we take line 7, we divide that, we cap that at 100,000, divide by 12, and multiply by 2.5. Now, well, here's what you can't do. You can't call me, you can't call Joe, you can't call your lender and say, change it right now, I want this loan right now, because there's a little caveat here. We don't get the new applications until next week, first week of March. So even if we want to process you based on the new information, we got to wait till next week because we can't even move forward yet and give you the application to fill out. So what did I just share with you? First thing I just shared with you is if you're a sole prop, there's 2 ways now to calculate. That's number 1. Second thing I share with you, there's a new application coming that we do not have yet. Even Joe, she's amazing. She doesn't have it yet, all right? Don't call us saying you need it right now. We don't have it. Third thing is, obviously, there's going to be some back information that we're going to have to do in terms of calculating income for those who are already in the pipeline. So just be patient with us. Naturally, as lenders, we're going to report to SBA if it's taking us more time, if we need more time. You all know this is up to Congress, but we're going to do our best to get everybody through as fast as we possibly can. The lessons for you all are to just understand how the payroll protection loan is calculated, to get your paperwork together. You can't say you didn't have time to put your paperwork. We've been going through this since March of last year. So don't call me saying that, because we're going to have a harsh conversation at this point. But I want you to start getting your documents together, and I want you to talk to your lender, especially if you're sole prop, which I'm going to imagine the majority of you are, or you know somebody else. So make sure you share the wisdom. I'm going to ask you to be patient as over the next week we go through some of the changes. Some other quick tidbits: those who had student loan issues related to defaults, those are going to be removed. So if you had a government default and it was a student loan, that's going to be not the student loan. Nothing's going to be done with that, but we're going to be allowed to continue with the PPP process. For those of you who might have been incarcerated, there's still some rules. There's still some criminal history. But let's just say the rules have been lightened. That's the best way that I could say it without getting in trouble and my marketing team being mad at me. So, so we just want to share some of those updates with you really quickly. And Joe, I'm going to turn it back over to you. Thank you.
Thank you so much, Everett. And that lends itself to those changes and updates that were made yesterday that were announced and that will be forthcoming as of tomorrow. So we appreciate your sharing that information with our audience. So continuing on with the PPP program. Okay. Okay. All right. So now where we are, okay, we have the first draw PPP loan eligibility. So keep in mind that you must meet the applicable size standard for the industry in which you operate. So some industries are going to have a size standard that's based upon the number of employees, while others will have a size standard that's based upon their gross average annual receipts for either the past 3 years or the past 5 years. So first and foremost, you must meet the size standard. The industries that are newly eligible will include the housing co-ops, the destination marketing organizations, certain 501c6 organizations, which include the chambers of commerce and some business leagues. However, that does not include lobbying organizations, nor does it include sports organizations. And then some news organizations are now eligible for a first draw PPP. The same types of industries are eligible as it relates to your corporate structure, be it you're being a sole proprietor, independent contractor, or self-employed individual, or if you're a partnership, corporation, or an LLC. The 501c3 nonprofit orgs are still eligible, as well as the veterans organizations and the tribal businesses. So what is a second draw PPP loan? The second draw PPP loan applies to those borrowers who received a PPP loan in the first round and they have used all of the funds that were dispersed to them within whatever covered period they chose to use, and they're able to demonstrate that they have 300 employees or less and suffered a 25% reduction in gross receipts. So for most borrowers, the maximum amount of the second draw is going to be 2.5 times the average monthly payroll cost for either 2019 or 2020. And the maximum amount is going to be up to $2 million. So notice I said for most borrowers, it's going to be 2.5 times the average monthly payroll cost. Because for those borrowers that are engaged in accommodation and food services, those that come under major group 72 in the NAICS code, or the North American Industrial Classification System code, the code that identifies the type of business or industry it is in which you operate, the code that should be listed on your tax return. So for those in major group 72, they will use 3.5 times their average monthly payroll cost for 2019 or 2020, and the maximum loan is still $2 million. And those borrowers will submit the SBA form 2483SD for second draw. So with the second draw eligibility, As I mentioned, you must have previously received your first draw loan, and the covered periods cannot overlap. That lends itself to you must have used all of your funds by the time your second draw loan is submitted. You must be able to demonstrate, in addition to having used all the funds, that you meet your size standard and that you have no more than 300 employees, okay? You must be able to demonstrate that you have at least a 25% reduction in gross receipts between comparable quarters in 2019 and 2020. And we are using calendar quarters. So you'll either use January, February, or March, April, May, June, July, August, or September. You can't just pick 3 months that you want to use. It has to be a calendar quarter. So just to recap on the PPP loan application process, you're going to find a lender, either your lender that you use normally, or you can go to our lender match portal if you're having difficulty finding a lender, or we have Everett here with us who can assist you. And once you find your lender that you want to use, then you would submit your application to that lender. And as I mentioned, March 31st, 2021 will be the last day that we will be able to accept applications. Now, we are going through a little bit more due diligence as it relates to eligibility. So whereas on the PPP round 1, the lenders received the loan number immediately, it's taking up to 48 to 72 hours now for the lenders to get the approval. So Everett, did you have anything that you wanted to share on this slide?
I do. So I want to give you a couple of tips. The first thing is, if you don't know your NAICS code, as Ms. Joe said, you can look in your tax return. Generally, it's on page 2 of your tax return. See where it's at. For those who are sole props, it will be on the Schedule C. If you haven't put it in or you don't know, NAICS, NAICS.com, code search. You should never pay to look this up or anything like that. It's a free service where you go and search, and you can put in the name of your business, or if you want to see the 72 series or any other series, you can just put in 72 and then hit search, and it shows you everything that's available. That's number one. Number two, I want to make sure we do define payroll since we're on this call. Payroll is the amount paid in wages, the benefits, which will be inclusive of health and retirement, and then there are some state and local taxes that are inclusive, not federal, because obviously it's a federal program, so you're not going to get a refund or a loan against federal taxes that you paid. But I want to make sure you know the definition of payroll. Last thing you heard Ms. Joe say something really, really important, 25% reduction in income. Now you might say, I'm in the pandemic, obviously I had a 25% reduction. We agree. However, we must verify, all right? And so we can verify one of 5 ways. The first thing is we compare Q1 2019 versus Q1 2020, Q1 2019, Q2 2019 versus Q2 2020, Q3 2019 versus Q3 2020, Q4 2019 versus Q4 2020, fiscal year 2019 versus fiscal year end 2020. That's five chances for you to show that you lost 25%. Now, how do you do that? You can do it in what I'll call the most kind of corporate way, which is you have financial statements, right? So Peachtree, QuickBooks, your CPA goes and prepares a statement, and they say Q1 19, this is the revenue. Q1 2020, this is the revenue. Very simple. If there's a 25% reduction, okay, so if you made $100,000 in Q1 2019, you made anything less than $75,000, then you qualify. You don't need to show us anything else. That's all we're looking for. And you could do that for any one of the 5 choices. Let's say you don't have one of those 3, QuickBooks, Peachtree, or CPA. You can then get bank statements. You can download the business bank statements, not your personal, business bank statements for Q1 2019, Q1 2020. You're a sole proprietor. You commingle funds. You know we don't like that. You know it already. You know what I'm about to say. You got to give us the bank statements, but you got to take the time now to write out the business expenses that you had for the business revenue, that you have for Q1 2019, and write out the business revenue you have for Q1 2020, and go get a bank account that's a business bank account so you don't have to go through this anymore. Okay? Thank you so much, Joe. I'll turn it back over to you.
Great. Thank you very much. So I want to just briefly, and then I'll turn it back over to Everett. Just discuss, when we talk about the forgiveness, you have to request forgiveness. And if you want your loan to be 100% forgiven, you must ensure that you are using the funds for the eligible expenses and payroll costs. So that includes 60%, no less than 60% for payroll, and no more than 40% for eligible expenses. Any amount that's not forgiven will be converted to a loan of 5 years if your loan was approved after June 5th, 2020, and it will be at a rate of 1%. And the lender will notify you whether or not your loan has been 100% forgiveness. So you want to make sure that you're tracking all of your expenses for which you're using these funds, and that you're using the funds appropriately so that you can assure that your loan will be forgiven. You must request forgiveness. It's not automatic. So you must request forgiveness. And I mentioned that we no longer deduct your Eidl advance, and you're now able to count your expenses that you use the PPP funds to pay on as a deduction on your IRS tax returns. So we still have the economic injury disaster loan that's available to you. Keep in mind, this is a working capital loan that's designed to give you up to 6 months of working capital for normal operating expenses. It is not intended for you to expand your business or to purchase equipment or to engage in constructing a facility. This is a direct loan from SBA, costs you nothing to apply. It's a 30-year loan for businesses at 3 3/4% and for nonprofits at 2 3/4%. We are requiring collateral on any loans over $25,000, and it's open to nonprofits as well as those small businesses who meet their size standard. The targeted Eidl advance is available to those individuals and businesses, or those businesses rather, who had applied for an Eidl prior to December 26, 2020. Now, there's nothing that you need to do to take advantage of this until you receive an email from SBA. That's why it's called targeted Eidl advance. We're targeting those individuals who received an Eidl advance but did not receive the full $10,000. So say, for instance, you got $2,000. That means that you still have $8,000 rather for which you can apply. And in order to be eligible, you must be in a low income community as defined by IRS, and SBA is using section 45DE of the IRS code, and we're using questions or subparagraphs rather 1 and 3 through 5. So we're using 1, 3, 4, and 5 of that section 45DE in determining the low income community. We now have a public facing site where you can go in and put in your information to determine whether or not you're in a low income community. You must be able to demonstrate that you suffered an economic loss of greater than 30%. And of course, you must apply. And once you submit that application, SBA will respond to you to let you know whether or not you are eligible. Please make sure that you check your banking account information, that the name that's on the loan matches the name that's on the business bank account, and that there have been no changes, and make sure that we have current email address for you. So in order to verify your eligibility, you will be required to have your 2019 federal tax returns available. You will need to submit an SBA Form 4506T, which is a request for transcript. We will request your transcript from IRS. As I mentioned, you'll get an email from SBA asking if you want to apply for the difference. So say if you receive no advance at all, but you had submitted your application by December 26, 2020, then that means if you meet the eligibility criteria, then you'll be eligible for the full $10,000. The goal is to get everyone up to that $10,000 Eidl advance that's available to you. So for our shuttered venue operators grant, the applications are not yet open. But for our shuttered venue operators, please know that you must have an active SAM registration in order to take advantage of that. And we in the district office can assist you with completing your SAM registration. And as soon as the shuttered venue operators grant is available, we'll issue a press release and notices so that you can start applying. Now, it is important to remember that if you get a PPP loan, you are not eligible to apply for a shuttered venues operators grant. We can't advise you on which is best for you to take. However, it'll have to be a business decision on your part. So this concludes my presentation, and I thank you all for listening, and I'll turn it over to Everett.
Thank you so much, Joe. That was great information. All right, here we go. All right, so I'm going to be fairly quick because I see that you have several questions, and make sure we can get to Q&A. I just want to know who Lendistry is, and I want to give you some guidance, just in general on who you can go to. So Lendistry is a technology-enabled community development financial institution. I'm the CEO. It was created by a group of bankers, and we wanted to help underserved communities, and we wanted to think about scalable lending and scalable capital deployment. And so first thing we started to do is we decided, let's go out, and the best way to help with access to capital and help underserved communities is make sure that we can be a part of what I would call the banking ecosystem, so that we can provide as many of the programs to the small businesses as possible. And so we're a community development financial institution, which allows us to participate in treasury programs. The best way to think about something like this is, let's say you're coming out of this pandemic and you don't have a lot of collateral, but you want a commercial loan. And we have the ability to participate in state loan guarantee programs. So every state in the country actually has loan guarantee programs, very similar to SBA, in which they can support your loan by what we call a credit enhancement or a loan guarantee. We're a community development entity that allows us to participate in tax credit programs to, again, help some of our larger small businesses. We're a member of Federal Home Loan Bank. So we help small businesses when they want to purchase real estate or refinance the real estate that they're in. And then we're an SBA lender. For PPP, we're lending nationally. And we also are the second largest lender in the country for a program called SBA Community Advantage, which is a loan type between $50,000 and $250,000, which can help you in a variety of different things. But the most common are business acquisition, debt consolidation, expansion of your business, and working capital. This just gives you history. We started in 2015. I like to say we understand small businesses very well because we have been a small business for a very long time. In 2020 is where we really started expanding and really started leveraging technology. We did this so that we could really we felt that minority-led businesses were not involved in capital deployment as much as we should be. So sometimes we are the lenders, but we're not involved in all of the programs. And so in Lendistry, we took an active role in capital deployment programs. You can see in the big purple box, we're deploying $500 million for California right now. And that'll take me to some of the other points that I'd like to share with you. So on the left, I have California Relief Grant. I want to share with you that every state got a minimum of $1.25 billion in one of the first stimulus bills. Every state will again get $1.25 billion. And so I bring this up to you because I think it's really important that you think about your legislators, your congressional districts and different things like that. You want to figure out ways that you could take advantage of additional programs in addition to SBA. And almost every state had a grant program. In addition to every state having a grant program, every county in the country that had greater than 500,000 people also got money. So it's extremely important that you, as a business owner, add your voice to where that money goes, because as you know, we're preparing for another stimulus. So there'll be another allocation, highly likely, I can't promise, of course, but there'll be another allocation to these various programs, and whether it be the rules. Joe and I had a great conversation about one of the states, and they said that a small business equals a retail, street location, which we all know that's not true. So you might want to be involved in that process to say, define what a small business is. You might want to define where the money is going to. You might want to define how much money is being paid out. Lendistry has been involved in several of these programs. So on the left, you've got California Relief Grant, where $500 million is being deployed to small businesses in amounts of $5,000 to $25,000. We were also involved with 17 other CDFIs in the state of Pennsylvania's grant program, which is on the far right, which had grant programs up to $50,000. We deployed about $281 million there. And then in the middle is the Paycheck Protection Program, which you all know, as I said, we're a national lender for that. But again, I wanted to just point out this slide for you because we're involved in 10 different programs. So we have a lot of different funds and different things available to small businesses. But I also just wanted to make sure that you were aware, because again, each one of your states that's on the phone, I saw some great people from Louisiana and Ohio. I want to make sure you're involved in that planning, preferably prior to the money coming. Because as you know, when the money comes, Treasury is going to put a timeline on which it needs to be deployed. This is our normal products. We do have SBA, again, traditional term loans, lines of credit, revolving, express lines of credit, which generally means the amount is under $250,000 as opposed to a regular revolving line of credit. And then we also do commercial real estate loans. So just this gives you somewhat of a snapshot of the different programs that we offer. We actually offer about 8 different programs. So this is what fit on the paper, but we've got 3 other programs. And then finally, you have a lot of resources to you. National Urban League is one of your resources. We have a nonprofit called the Center. We partner with a lot of chambers and then a lot of other organizations where we provide online classes. So I always share this because maybe you're looking for more classes to go to. I want you to make sure you use the National Urban League, and I want to make sure that you know that there's lots of resources out here for you. One of the good things I think in the pandemic, if there is such a good thing as saying a good thing, is that I think we've had an opportunity to think about pivoting our businesses, think about what we can do to grow our businesses and how we might do things differently, which as small business owners, we rarely had an opportunity to do because of the hustle and bustle of running the business as well as the personal things that we were going through. So again, I share all this with you. I'm the CEO of Lendistry. I'm here to help you, whether it be that you go through Lendistry or another lender, here to give you guidance and appreciate just the opportunity to be here. Stephanie, I don't know if we're turning it back over to you, but I am complete. Thank you so much.
Thank you. So I believe we're going to open it up for Q&A, and my colleague Corin Wilkins is going to manage the chat. So I'm going to come off camera and let her start that part of the presentation. Thank you.
Yes. Hi, can everyone hear me?
Yes.
Okay, great. Thank you so much for a lovely presentation. We do have a few great questions that came up in the chat box. So I'll start in the order that they were received. We have Angela asking, I have not found any lenders that allow 72 amount in the application. The applications pre-populate the calculation to not go over 8333.00 payroll amount. Does anyone have a 72 business and a lender that they've used? So perhaps Everett or Joe, you could provide some insight into that.
Yeah, I would say, Angela, great question. So two things. One, it sounds like it could just be the application process. So I would encourage you to pick up the phone and just call the lender if you can, or email them just to see, maybe they have something on the back end that's changing it. Because what it probably is in the beginning, as you heard Joe mention, everybody was 2.5. And then more recently, changed to 3.5. So I'll tell you at Lendistry, we don't have a cap in the loan amount, but on the back end, in our underwriting, we flip it from 2.5 or 3.5, depending on that code. So again, it might just be something that you're not seeing externally. It might be an internal thing for the lender. If not, you're welcome to go to lendistry.com and apply. But I do want to encourage you, especially if you went through another lender, to at least call them and give them the benefit of the doubt, because maybe there's just an internal change that you can't see.
Yes, I agree with that. And even sometimes with us personally, there are things that are on the back end that's included in an application that we can't see, but nothing beats picking up that phone and talking to the lending officer.
Okay, great. Here's another question coming in from Angela. Where is the link to find your location for the EIDL advance? And also, can an event planner or event producers apply to the SVO grant?
Okay, so there is no open link or a link that's available to the general public for the targeted Eidl advance. Those individuals who are eligible, meaning they have submitted an Eidl application by December 26, 2020, will receive an email from SBA. So right now we're still working with those individuals who had received a portion of the Eidl advance. So we haven't gotten to that second priority group, which are those who receive no advance. So if you had submitted an Eidl by December 26, 2020, you will receive an email from the Office of Disaster Assistance with a link for you to apply, because there is no general link available to the general public. And what was the next part of that question?
Can event planners and event producers apply to the SVO grant?
Not yet, because that application is not open yet, and we're still developing all of the eligibility criteria for the SVOG. So stay tuned. We're still working on that. It's not open yet.
Okay, great. This question came in from Anna. I do believe it was answered, but I will ask it again in the event that anyone came in late. Can the tax return be personal? And what if you didn't claim your business on your taxes from 2019 due to not having revenue?
So yeah, so yes is the answer. Definitely personal tax returns, we get those all the time. Lack of revenue would mean that there would not be a loan amount that can be created. So just so we're clear, so if there was zero in terms of the revenue, then there would be zero in terms of the loan amount. However, there is the opportunity to bring in 2020 income. This might take a little bit deeper conversation with the lender because there's a cutoff of February 15th. So we gotta make sure we understand exactly what the scenario is. So it might be a little bit hard to just kind of blurt out answers here, but there might be an opportunity depending on how the revenue flow through the business. If it happened after February 15, 2020, I am going to unfortunately say this wouldn't be the proper program for them. And they might want to look at one of the state or county grant programs, might have a better opportunity, a better chance.
And for the Eidl, if they did not claim any business income on their 2019 tax returns, then and they're proposing to use an amount from 2020, then that could possibly reduce the amount of the Eidl for which they are eligible. So that's going to present a problem on both fronts with PPP and with Eidl, because one of the things we were considering as a part of the Eidl was income from 2019 in determining the amount of your working capital expenses for 6 months. So that will present a challenge.
Okay, great. Another question that's coming in from Catherine. I did an application for the PPP and EIDL on February 9th of 2021. How do I know who my lender is? And I submitted an application online. So she's wondering who the lender is. There's a way to determine that.
For us, we have limited visibility. You should have received an email from whichever lenders pulled your application. It may have been 2, it may have been 3. Right now, the district office does not have visibility to let you know which of those lenders actually made the loan. Can you add to that, Everett?
Yeah, it's actually threw me for a little bit of loop. I don't think I've heard that one before. So
we're getting that question a lot.
So I would encourage you to, again, maybe what I would do here is I probably check junk mail and spam. I got it out to you. But again, we can't always find all the emails that are being sent to us. But I would almost assume at this point that the lender sent you something, a username, a password, something to get into a portal, something at this point where they're trying to contact you as well. Unfortunately, what we've seen on the lender side is every once in a while, and I apologize, and I'm not saying this is you, but we've seen people misspell their name, misspell their phone number, misspell their email.
Oh yeah.
And so we understand that that happens in the midst of a pandemic, and obviously a lot of distress is going on. So, but I would encourage you to look out, because there's something they're looking for you. I can almost guarantee you that.
Mm-hmm.
Okay, great. So we're actually hedging on the end of our session, but can we go to about 3:10 since we started a bit late? We have a few more questions in the chat.
I think I'm available. I'm checking my calendar, so go ahead.
Okay, all right.
Go ahead.
Next question. This is from Nefri. Forgive me if I'm mispronouncing this. Management at the daycare center where I am employed have foregone pay to keep us afloat. How do we ensure we receive our maximum PPP benefit when their wages are not currently reflected on our payroll reports?
Great question. So I'm going to repeat it, but essentially there's some people who haven't been paid because they're trying to pay others. A couple of things. Number one, I would take a look at and see what was the past pay that you might be able to show, right? So I'm assuming it didn't happen throughout the whole year. I'm assuming that it probably happened towards the end of the pandemic, the beginning of the pandemic. So we're talking maybe March-ish. And so there should be something in January, February. You are going to have to write a letter. You are going to have to explain what happened. And actually the owners, assuming they get a paycheck, it's going to be a little bit easier. If it's a distribution, there's very little that we can do. But if it's a paycheck, there'll be something that we might be able to look into and be able to kind of extrapolate from the past what should happen. If it's a distribution and we're talking about profitability, that gets really, really hard to define and guarantee that would have happened.
Mm-hmm.
So hopefully that helps. But this is going to be another one where you're going to have a little bit more of a conversation and sit down. But I would start to write what we call an LOE, letter of explanation. I would start to write that now to explain what happened and get as much backup as possible to show the past. And hopefully that's indicative of the future when everything gets better.
And something else that we've been suggesting, as you mentioned, writing a letter, but also tracking what your mindset was when you applied for the PPP, because necessity, if you're going to apply for a second draw, is still one of the requirements that you must meet in terms of whether or not the loan is really, really needed. So we've been encouraging everyone to make a note of what your mindset was at the time that you applied for your first PPP, and what it was that you were experiencing. What were you thinking, and what your intent was. All of that's going to be beneficial when it's time to request forgiveness.
Okay, Great, thank you. This question is coming in from Angela. Angela mentioned she's really disappointed that nonprofits that did not have employees are not able to get the PPP loans. Round one has Form 990 calculations, but in round 2 and 3, it wasn't allowed. Does anyone know if this may change?
I haven't seen anything that's going to allow that to change. Keep in mind, PPP, Paycheck Protection Program, it was designed to preserve the salaries and wages of the employees, even if you were a self-employed individual. So I have not seen anything that changes that. Have you ever?
Yeah, and I would encourage Angela to just think there are other programs out there. That's why I tried to bring up the state programs in the county. I know there's not enough money for everybody. Let's deal with the reality of the situation, and every program is not perfect. And I especially know for nonprofits, it's hard because you're caught in between obviously your own world and the small business world right now. But I would encourage to keep looking for different programs. And like I said before, to add your voice, because there will be a lot of state and county programs that are about to get funded. And so now is the time to add your voice before they get the money, and then they get this, mandate to get that money out the door.
And I know that the desire may be to get the PPP because forgiveness is available, but keep in mind that some nonprofits are eligible for the 30-year 2 3/4% loan under the Eidl program. So that would be another option for you.
Okay, great. Thank you for that. Linda has a question. If a business has already received the PPP based on payroll cost, can it now apply based on gross revenue and possibly get a loan for the difference?
I assume that's for the sole proprietor. And so this is where I drew that big asterisk. We're going to have to ask you to wait till next week. Naturally, it's going to ask that, right? Because we're going to get a ton of people that say, my loan amount is too low, or I qualify for more. So, that's to be determined. It's a great question, Linda. But right now we don't have the answer yet. But we as lenders, the lending community, has brought that up. How do we help those who need more? Are we doing an addendum to the loan agreement? Are we doing a new loan agreement? What are we doing? So to be determined on that. Remember, this is just announced yesterday. So we do want to respectfully give SBA a chance also to think through it and think about it, because what we don't want to do is do something in haste and come back to you and have to redo it all over again.
Right, yes.
Okay, great. And I think we have time for just one more question. This is coming from Laverne. What does it mean if you did the EIDL application and you didn't get it, but got some kind of numbers on the application?
I don't follow what they mean by numbers.
Yes, I'm not sure. Laverne, if you could perhaps just clarify this in the chat.
And while she is,
we'll move on to another question.
Okay.
This is coming from Joyce Hurdle. What is the name of the new SBA fund from President Joe Biden?
There is no new SBA fund. What we have is PPP and Eidl, and the targeted Eidl advance, and the SVOG. There is no new fund. What President Biden has put in place is a restriction on new applications that can be accepted between February 24th and March 9th. And that new restriction is for individual companies that have less than 20 employees. And the reason for that is so that we can reach more of the sole proprietors and the self-employed. SBA has not been given any more money, nor has Congress allocated any additional programs or funds.
And from a lender's perspective, we still want you to apply. We just can't submit you to SBA. So just to be clear, for any of you that have greater than 20 employees, greater than 20 employees, still apply, because we need to get you in there as of March 10th. And we want to take you through the motions.
Okay, great. So let's see. Laverne mentions it was numbers on the application. She's assuming it was to locate the application. So I'm not sure if that clarifies things a bit.
Well, there's an application number that's given when they submit the Eidl. So if she was declined, she can request reconsideration as long as she's addressing all of the items for which she was declined. So she can request reconsideration. Now, also, we have some individuals, some points of contact who have been like checking on applications for us and getting back to us with a little bit more information. So if she emails me and sends me her application number and the name, then I can get someone to check it and then get some more information for her. My email address is jo.lawrence, LAWRENCE, the number 3 at SBA.gov. Joe.lawrence3 at SBA.gov.
Okay, thank you, Ms. Joe. We put that in the chat as well as Everett, we put your email address in the chat as well.
Okay,
For the
thank you.
attendees whose questions we were unable to answer today, we apologize. We were running short on time and there were many questions that did come in, but please feel free to reach out to Ms. Joe as well as Everett with your questions. And thank you again.
Oh, thanks.
Thank you for that.
Steph- Yep.
So thank you very much, Corin. And I just wanted to say a big thank you to our speakers, Everett and Joe. We're so grateful for all the time you took today, particularly as busy as you are with everything going on with PPP and the new information that just came out. The information you provided was phenomenal, very informative. I'm encouraging everybody who's on the phone to take advantage. Contact Joe or Everett with any additional questions. Feel free to reach out to them. Also, for more resource information, please visit their websites at sba.gov, sba.gov, or lendistry.com. If you'd like information on the National Urban League's Entrepreneurship Center program, please visit our website at nul.org. As always, we want to thank our speakers and all of you for attending. We hope it was informative. The recordings will be made available. If you want to notify or share this with other folks that weren't able to make the call, or you just want to re-listen to the recording, that should be available on our website, nul.org, sometime in the next week. Please join us for our next webinars. You'll see information come through on our website. Stay tuned. Thank you all. Have a great day. Take care.
Right.
Thank you.
All right. Bye-bye. Thank you.